So what is going on in the finance markets today that may affect your immediate financial future? Hi, my name is Russell McDonald. I'm a mortgage broker with Tradmore, a mortgage company in the San Francisco Bay Area. Last week I gave you guys some explanations about how the Fed announcement moved interest rates ever so slightly, and that even though the Fed dropped its key rate by 0.25%, the effective movement on Wednesday was really only a few hundredths of a percent in mortgages and long-term treasuries, which really is not enough to make a significant difference to most of you. But then on Thursday, we had some really weak economic news that did a lot more to push the needle lower. On Thursday afternoon, mortgage interest rates and treasury note rates were about 1/8% better, which for us is a really big move in such a short period of time. Then on Friday, part of those gains were erased because the October employment report came out and it was a lot stronger than expected. And today, most of those gains are completely erased in the treasury markets because it looks like we have some really positive movement towards reaching a trade deal with China. That has the major stock indices all higher. We're talking record territories in some of these cases. Now that tends to make interest rates just a little bit worse for us. Right now the 10-year treasury notes are trading at right about where they were before the Fed announcement last Wednesday. Mortgages are still a little bit better than before the Fed announcement, but I was really surprised today that we didn't see any midday price increases. And this is just based on what was happening in the markets. Things are going so well with the trade talks that it is looking like Xi may actually come to the U.S. to sign a phase 1 trade deal in the coming weeks. That wasn't on the table last week, really. China is looking to avoid certain new import taxes that are set to start on December 15th. Okay, why is this immediately bad for mortgage interest rates? Well, when there's market uncertainty, the flight to quality has large investors pulling money out of stocks and putting them into bonds. Since it looks like the markets and economy may be starting to stabilize with this news, it has some of the big players doing the opposite, which lowers bond prices, raises their rates. Okay, how's this for an interesting tidbit? There's a Redfin report that came out in the last couple of days that says there's been a loss of more than $2.5 trillion. That's with a T, guys. So $2.5 trillion in losses in real estate because of this year's wildfires here in California. Now, while this may cause some people to decide to leave the state completely and sell their homes, all the destruction is going to put serious pressure on the inventory levels throughout the state either way. It's not a great situation. Here's some other interesting news on the mortgage front that came out. Right now, there's a lot more first-time home buyers than at any time in the last several years. But at the same time, what we call early delinquencies, that's like in the first 6 months of home ownership, those are at their highest level in 10 years. So I'm thinking that maybe some of these first-time home buyers are biting off more than they can chew, because that's where we're seeing an increase. Listen, it's important to know how to budget when you decide to take the leap to home ownership, and make sure you know what you're getting into. And this is part of why you need to talk with a true professional who isn't going to push you into doing a purchase you aren't ready for just to get a commission. Okay. Something else I keep telling you guys about is the fact that you should opt out of pre-screened credit offers. This came up again just last week with one of my people, with one of my buyers. I'm going to keep talking about this until all of my friends and clients tell me they've opted out and that I should shut up about it, because there are some serious predators out there that buy this data under false pretenses, and then they use this information to take advantage of you. That's bad. It's that bad. One of my clients just got a phishing email asking her to securely upload financial documentation to a website that has nothing to do with our transaction. This happens all the time. One of the ways that these scammers find out about the fact that you're in the process of getting a mortgage is that Experian and TransUnion and Equifax sell them the information that you are looking for a mortgage. Do you really want those guys to make more money by selling your information to scammers? Sometime in the next few weeks, I will have a really long video about this specific topic of opting out of pre-screened offers for my new podcast. My podcast will be dropping sometime between now and Thanksgiving. The first 2 episodes are already recorded. One is a CPA that uses social media a lot and has a lot of great tips for you for your own businesses. And the other is a marketing expert who goes into lots of detail about ways that you can use social media to improve your reach in your marketplace. So, some of my episodes are going to be just me, by myself, going through things that I've learned about real estate and finance and small business over the past 10,000 days that I've been doing this. I've always been looking for better ways to make things happen in real estate and in finance. You know, I actually applied for patents about specific ways to do online mortgage applications and compliance several months before the first online mortgage application was even done back in the 90s. This is going to be good, guys. If you have any questions about anything or a topic you'd like me to address, please shoot me off a message, and anything I can do to be a resource for you guys, please let me know. And I'm looking forward to being in touch with you in the future. Thank you.